Gold has historically been viewed by investors as a safe haven. They regard it as a hedge against currency risk, a great place to park your money during times of great economic uncertainty. And guys, we are currently living through the greatest global economic uncertainty that we faced for over a century. So, with that said, should we be buying physical gold? What is the best way to invest in gold and also benefit from gold's soaring prices? That's what we are talking about in today's video, guys. Let's go. What's going on, guys? My name's Emmanuel and welcome to my channel. Investors are now all rushing to gold as the dollar continues to plummet, which is leading to the price of gold reaching an all-time high of $1,980, smashing its previous all-time high record, which was set back in 2011. And that's just insane when you think about it, guys. But the rush to buy gold is also understandable, with the continued printing of money by the Federal Reserve. So, should we be buying gold? Warren Buffett has famously said that gold doesn't do anything but sit there and look at you. It produces nothing, it's an unproductive asset, and therefore you're simply hoping that over time someone else will pay a higher price for your gold. But if there's a lesson that we can learn from California's 1948 gold rush and also from the first Californian millionaire Sam Brannan, it's this. During a gold rush, sell shovels. Meaning, don't join the masses in the hunting for or buying of physical gold. Instead, your focus should be on investing in products or in stocks that help to produce the gold. So with that said, guys, I think one of the best ways to invest in gold is by investing in solid gold mining company with the added bonus of receiving a high yielding dividend payments from these companies. And so for this video, we're going to be pulling out the Excel sheet and comparing the three most popular gold mining stocks that are currently trading on the London Stock Exchange. Don't forget to smash the like button, guys, as it helps with the YouTube algorithm. If you're new, welcome, and I hope you gain a ton of value from today's content. And if you do, don't forget to hit the subscribe button, as it'll be really cool having you on board. Thank you, guys, and let's jump into today's analysis.
Okay, guys, so before we jump into comparing the financials of the top three gold mining stocks that are available on the London Stock Exchange, there are a few factors that we need to consider. Okay, we need to take this into consideration. So the first factor is gold mining company stocks may correlate with the gold price. So what that means is if the price of gold is going higher, then typically the price of the gold mining stocks also seems to follow in that trend, but not always. Okay, so the reason for this is if you have a product that sells for $100 and the demand for that product surges by, let's say, 50%, then you can essentially sell the same product for $150 at really no extra cost to the producers, to the manufacturers. The operations to create the product generally tends to remain the same, which therefore leads to a boosting of profit margins because you're able to sell the same product at 50% higher just because there's more demand for the product. So with these gold mining companies, they've been able to sell their gold at one price, but because the price of gold has surged, they're able to then sell that same product more expensive, but the operations hasn't changed. So that's how the gold mining stock prices tends to correlate with the price of gold. Okay. However, the growth and the return in the stock ultimately depends on the earnings of the company. All right, so not just the value of gold, because if you have terrible management, for example, and they're not able to maintain the profit margins, then of course the stock price of the gold mining company will begin to reduce. Okay, so you need to consider effective management. So when we're looking at effective management, we want to see consistent sales and consistent revenue growth. Okay, because that's always a good indicator of an effective management in place. We also want to see production costs. Okay, so we want to see high operating margins, especially if the price of gold is going up. That means the company will be able to maintain more earnings from its revenue creation. Okay, so we're looking for high operating margins. We also want to see the reserves, and also we want to look at the mine exploration and also the project developments. Okay, those are important factors you need to consider before investing in a gold mining company. Okay, so let's move on to the financial comparison, guys. All right, guys, so the companies that we're going to be looking at today is Polymetal International, you have Centamin, and we have Highland Gold Mining. Okay, so all of these companies are trading on the London Stock Exchange. All right, and let's just go through the share price. Okay, so you have Polymetal here. The share price is £18.97p as of time of recording. You've got Centamin that is at £2 a share, and you've got Highland Gold Mining, which is at £2.95 a share. So straight off the bat, you can see Polymetal is the most expensive of all three of these companies. And if you look at the 1 year gain and loss, you can see why it's the most expensive, because if you look at that growth, within 1 year, Polymetal has gone up by 89%, which is staggering. That's almost 100% gain in just 1 year, which is crazy. Sentiment has grown by 62% within the last year, and Highland has been the underperformer, growing at only 37%. So although Polymetal is the most expensive, it has experienced the most growth within the last year, but it is the most expensive. So just from a share price and growth point of view, I'm probably going to have to give the W to Polymetal. I'll give Polymetal the W just because of that impressive growth rate, all right? So Polymetal takes the W on this. Now, looking at the income statement, guys, as you can see, the revenue for Polymetal is at 2.2 billion. Centamin has created a revenue of 652 million. And Highland is again the underperformer, only generating 395 million, okay, in revenue. And the revenue, guys, is pretty much the total amount of money that the business has generated before you deduct the expenses and the cost of revenue. All right, okay, looking at the net income, guys, and the net income is pretty much the earnings that's made after paying taxes. So after you've deducted your cost of revenue, your operations, and you paid your taxes, this is the bottom line. All right, so the net income for Polymetal is 480 million. Centamin's net income is 87 million, and Highland Gold Mining isn't doing too bad at 177 million. Okay, all right, guys, so looking at the operating margins of all three companies, and the way I like to look at operating margins is it's the amount of money that the company has been able to retain as earnings from its revenue. So for example, if Polymetal made £100, £36 of that £100 is kept as earnings. Oh, sorry, that's my phone. So yeah, sorry guys. So £36 of £100 is kept as earnings. So looking at the operating margins, Polymetal International is sitting at 36.15% operating margin, which is really, really impressive. To be fair, they're all impressive because Centamin has a high operating margin of 28%. Highland Gold Mining has an operating margin of 36%. So to be fair, they're actually all really high, okay? Because typically you look for an operating margin over 15%. That's usually considered as very, very good. So all three are doing incredible. And now we move on to the PE ratio, which is the price to earning ratio. PE ratio will determine how long it will take for you to get a return on your money at the current EPS, okay? So the PE ratio for Polymetal is 18, which I guess you could say it will take you 18 years to get a return on your investment. So the lower the PE ratio, the better. And the lower the PE ratio, the more people tend to consider it as undervalued. So Polymetal has a PE ratio of 18.83. Centamin is actually the highest at 27 PE ratio, and Highland Gold Mining is sitting at a PE ratio of just 6.15, which is amazing. That's so it will take you 6 years if you were to invest, and if Highland Gold keep up with their earnings for you to get a return on your investment, which is pretty good. Now looking at their quarterly revenue growth, guys, and this is an important figure. Looking at this from a year on year perspective, okay? So the quarterly revenue growth for Polymetal is 19.34%, and that's actually really good. So a quarterly revenue growth of 20% or higher, you're pretty much considering that company a growth stock. So this is on the borderline of being identified as a growth stock. You know, sentiment is lagging behind at only 8%, and Highland Gold Mining is sitting at a whopping 27% quarterly revenue year-on-year growth, which is absolutely impressive. So looking at all three, I'm going to rule out sentiment straight away. I do like the operating margins for both Highland Gold Mining and also Polymetal. But I'm going to give the W to Highland Gold Mining, guys. I mean, look at that revenue growth year on year, 27%. That's impressive. So I'm going to give the W to Highland Gold Mining. All right, guys. So moving on to the balance sheet of all three companies, and I really love the balance sheet, guys. Of all three, they're really impressive. Okay, so the total current assets, guys. If you watched any of my previous video, you would know that that's the cash or assets that's available for the company within the next 12 months. Okay, so they're able to generate this amount of cash, because if they ever fall into trouble and they need to fulfill their financial obligations, so which is the total current liabilities within the next 12 months, they've got enough in the total current assets value to cover their total current liabilities. Okay, so that's a very important figure, and the current ratio is pretty much the division between the two. Okay, so that will give you your current ratio. So you divide your total current assets by your total current liabilities, and that will give you your current ratio. So the total current assets for Polymetal is sitting at 1.1 billion. Centamin's total current asset is sitting at 446 million, and Highland Gold Mining's is lagging behind the rest. It's sitting at 176 million. However, the total current liabilities for Highland Gold Mining is 77 million. The total current liabilities for Centamin is sitting at 66 million. The total current liabilities for Polymetal International is sitting at 431 million. Okay, so taking a look at the current ratio, guys, and you can see that sentiment is pretty much smoking all three, sitting at 6.75, followed by Polymetal International, which is 2.76, and in last place you have Highland Gold Mining. So straight off the bat, I'm going to give that W to sentiment. So this is sentiment's first W, all right, out of all three. So within the next 12 months, sentiment is in the best position. Okay, so looking at the total cash, guys, and the total cash position for Polymetal sitting at 253 million. You have Sentiment, which has a total cash value of 284 million, which is actually quite impressive. And also you have Highland Gold Mining, which again is lagging behind all three at only 42 million. Now the long-term debt for Polymetal is 1.5 billion, so it is really over leveraged. And for the life of me, I couldn't find a total long-term debt for Sentiment, which is a red flag, to be honest. And you have Highland Gold Mining, which has a total long-term debt of 274 million. Okay, so just because we have to pretty much disqualify Sentiment, because I looked on their reports, I looked on Yahoo Finance, I looked on Morningstar, and just couldn't find their long-term debt value. Okay, so moving on to their total assets. And this is their total long-term assets, and also looking at their total liabilities, this is also their total long-term liabilities. So you have Polymetal, which is sitting at 4.2 billion. You have Sentiment that has a total asset value of 1.3 billion, and Highland is actually doing quite well at a total asset value of 1.4 billion. Okay, so total liabilities now, guys. Polymetal has a total liabilities of 2.2 billion. Sentiment is actually doing rather impressive from this standpoint. They only have 80 million in total liabilities. And looking at Highland Gold Mining, guys, their total liabilities is 462 million. Okay, guys, so the stockholder equity is pretty much an indication that the assets are growing much faster than the liabilities. And as an investor, it's an important figure to look out for. And you also want to make sure that the stockholder equity has been increasing year on year. Okay, so all of them has positive stockholder equity. However, in terms of the year on year growth, Sentiment's stockholder equity has been up and down. It hasn't been consistent year on year. However, the stockholder equity growth has been increasing for Highland Gold Mining and also for Polymetal International. Okay, so based on the overall balance sheet to the total long-term debt position and also the stockholder equity growth, I'm going to have to give the W to Polymetal International, guys. Okay, so that's a W for Polymetal International. Okay. All right, guys, and now the last part of a financial statement, we want to look at the cash flow statement, okay? So from the cash flow statement, we want to look at the net cash from operations, and it's very important that this number is positive, because if the number is negative, it means that the business is losing money from its operations, okay? And also we want to make sure that this net cash from operations has been increasing year on year. Okay, so all three are positive. Okay, so they have positive net cash from operations, which is a plus for all three companies. However, in terms of the growth, Highland Gold Mining have been growing their net cash from operations from a year on year point of view. So straight away, guys, we're going to give the W to Highland Gold Minings. Okay. All right, guys, so moving on to net cash used for investment. And at this particular part of the cash flow statement, you really want to make sure that you are checking that the net cash used for investing activities have been back into the company, via investments in property, plant, purchases of investment, etc., instead of acquisitions of other companies. Okay, to get a lot more detail of that, you have to look into their financial statements on their quarterly and annual reports. But the net cash flow used by Polymetal was 397 million. Sentiment spent the less at minus 90 million, and Highland Gold Mining spent 107 million on net cash. Okay, so in terms of the net cash flow used for investments, I'm not really going to give a winner or a loser to this, because you definitely have to check the financial reports to make sure that they are not investing more into acquisitions. However, you have to make sure that they're investing more back into their own company. So now moving on to the juicy parts, guys, looking at the dividend yields, the sweet dividend yields. Polymetal's not doing too bad at 3.56%. Sentiment here is sitting at 4.67%, so it pays the highest dividends. And Highland Gold Mining it pays the least amount of dividends at 2.57%. So I ain't gonna waste no time on this. We're giving a W to Sentiment. They are paying a juicy dividend yield of 4.67%. All right, guys, so the last part of the cash flow statement is the free cash flow. And one of the most important things you need to find out is, has this figure been increasing year on year? Because this is pretty much the amount of cash left after they've spent all of the money paying out their dividends, all of the money used for investment, all of the money used for operations. You're left with your free cash flow. So it's important that this figure is positive, and it's also important for me as an investor that it's also growing year on year. So the free cash flow position for Polymetals 260 million. The free cash flow for Sentiment is 155 million, and Highland Gold is lagging behind at only 40 million. So all three are in positive free cash flow position, which is a plus for all three. However, in terms of year on year growth, Polymetal International takes the W, because their year on year free cash flow position has been growing year on year. So Polymetal takes the W from that standpoint. All right, guys, so who has the best financials? Who collected the most W? And the results are in, guys. The votes have been counted and finalized. I can now reveal that Sentiment had 2 W's. You had Highland Gold had 2 W's. And Polymetal had 3 W's, which means Polymetal International, from a financial standpoint, is the best gold mining stock available for you to invest in on the London Stock Exchange. But as always, guys, do your own due diligence. This is just a bit of fun and games. I actually had fun collating all of this information and comparing the financials of all three companies. Definitely do your research, guys. But this is the results of my research. And always, guys, you can always pick up a share of Polymetal International on Trading 212, as we've identified One share will cost you about £18.97p. Okay guys, and just lastly before we go, I just wanted to take a look at the charts, and as you can see, it's trading at its all-time highs. All right, so if you are to buy now, you are buying at the top. But for me personally, I'm going to wait for a bigger pullback. And it currently is having a bit of a red day today, which is good. So if it does hit £18 a share, I might decide to build my position in this company. But I'm going to keep watch, okay, guys? So make sure you have a plan. Make sure you put your orders in with your brokers and just leave it. You know, if it touches it and it fills your position, fine. Then you're in. If it doesn't, it's also fine. Okay, now taking a look at Polymetal International's production, I'm looking at their recent quarterly earnings, so that's their Q2 production, okay, results. And as you can see here, guys, they've mentioned that the company's Q2 gold equivalent production increased by 2% year on year, okay, and that's as a result of a strong performance by YZYL which compensated for the planned decline of Svetloi. Right. Yeah. All I know, guys, is that their production has been increasing year on year by a factor of 2%, which as an investor is always positive to see. And it's also one of the factors that we mentioned at the very beginning that we need to be on the lookout for. All right, guys?
I hope you enjoyed today's video, guys, and why not list in the comment section below your favorite gold mining company and also list your reasons why. But at the end of the day, guys, make sure you do your own due diligence and your own analysis before you decide to invest in any stock or any company. Invest in your own investing knowledge by purchasing a few of the stock investing books that I've recommended in the description below. Make sure you go grab yourself a copy, guys. And if you want a free stock, then sign up with my broker Trading 212 using the link in the description below, and Trading 212 will give you a free share and will also give me a free share. With all that said, guys, don't forget to smash the like button once again, hit the subscribe button and the notification bell if you want to see more content from myself. Thank you for watching, guys, and I'll catch you in the next video. Peace.